Okay. And good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Thursday, November 20th, Noviembre. Almost at an end. We're almost at Thanksgiving. I can't. Today she bought a turkey, and I was like, oh yeah, I got to update my Kroger cart so I can cook some things. How are you guys doing today?
So, did you do that on purpose?
No, that was somehow me. I went to go move my keyboard, and I hit some button on my keyboard, and it took Evan off of stage and then brought you back on stage.
Will, you started to talk, and Will just hotkeyed you straight backstage.
I said, no, I'm hosting today. Yeah, I hotkeyed you. So there's a hotkey. It's either the left arrow key or the control button. I think that's
one of those two is the banish Evan button. So.
Banish Evan specifically button.
I love that. I wish we could pair it with a sound effect.
What great power. Oh, that'd be so good. Like, woo! Yeah.
Or just good. I will work on it when I continue to set up things back at the home studio. I'm still in Buenos Aires, and we are your helpful place for Web3 news, commentary, answers to your crypto questions. So if you're listening to us live, then leave them below. And if you're listening in the future, hello, we hope your candles are green. We want to hear your questions too. Leave us a comment, or better yet, go where the show lives 24/7. Head over to community.rumshq.com. We would love to take your questions there, get to know you better. We often say, because it's true, the only thing missing at community.rumshq.com is you. So Will, Alex, you've had a couple of good shows. I'm so sorry I left you yesterday. I was, in fact, partying pretty hard the night before.
Were.
Usually it's
partying pretty hard.
I party very hard, but I walked my new friend SJ home after her phone died. She's an engineer over at Algorand. Get this. She hasn't even graduated university yet, and she's like full stack building for them. And
damn,
presumably to come on full time when she's done in December. And her phone died, so we were hanging out together, and I was like, oh, don't worry, I'll walk you home. And as I was walking home, the sun was coming up, and I was like, wait a second. I didn't even know what time it was. And I was like, are you kidding me right now? I was so mad. Like, once I eased into it, the sunrise was beautiful, but I was like mad as hell. I stayed out all night, and I was like, there's no way. There's absolutely no way I'm going to be able to do a show.
I've had a few moments like that where like walk out of a club and the sun blasts you in your face, and you're just like, what is happening?
Oh my gosh, right? Solom
what do you mean?
Solom says in the comments, does she know Cosmic? Of course, we're talking about our friend Cosmic Crypto. Maybe the #1 algo bull poster on TikTok, though he does talk about other things. I don't know if she does, but I definitely could introduce them. That would be a good episode to bring him on as maybe a guest host. They are hosting something here, the Algorand Experience, and I actually didn't get to go. It sounded like an immersive, full of activations, get to know Algorand and what they're building thing. But you know, there's a million different events to do. I'm going today to like 4 different things. I'm going to Shelling Point, which is a meeting of like the regenerative public goods concerned community on Ethereum, the Gitcoin people, etc. And Stella, our good friend Stella Achenbach of Unlock Protocol, is giving a talk there about how to put DAOs into practice. Then I get to go see our friends over at Stellar and Myosin. They're hosting marketing in the arena. Alex, it sounds like it's going to be a lot like what they did in Prague, just like a one-day, intense, fun mini conference with good networking. Lindsay is actually opening that conference with a talk about the future of stablecoin and, you know, in the wake of regulation at the top of the next hour. So good luck, Lindsay. I hope you're not listening to the show right now and that you give a killer talk. And then tonight is the Aave rave, or the Rave.
Oh, sick.
Dude, that's been the party everyone's talking about all week. And again, I'm not much of a partier, but I want to build a closer relationship with Aave. Everyone's going to be there. And my personal win is I DM'd Laura Shin that I wanted to meet her. Was she still here? And she said, I'll be at the conference today and tomorrow. And I was like, all right. So,
oh, that's so nice.
So it's not just partying, guys. There is a little partying, but
I feel like Laura's a good person. I know nothing about her, but I feel like she's a good person.
I feel like she is too. And I actually feel like she's a little shy, not shy, but like she's not obsessed with celebrity the way I feel like a lot of people who come to Web3 and start a show are. And I'm not projecting at all when I say that. You know what I mean? She's just a good egg.
Well, out of all of that, the thing that tickles me the most is we now have a closer relationship with Algorand than Cosmic, and I really hope one day that turns into like a sponsorship of the show, and I would find that to be really funny. And then we'd have to bring Cosmic on as like a guest commentator like once a week.
I would do it. I would do it 100%.
I would do that in a heartbeat.
Now, if you have a question, don't forget, leave it below. Will, I know you've got to bounce a little early today, so I thought maybe we could bring people into the conversation wherever you'd like to take it. But I just wanted to say, hey, man, way to go on your NVIDIA video, or should I say NVIDIA. I was not surprised that the #1 comment was, in fact, people saying, dude, it's NVIDIA. But
yeah, it's such an easy, it's such an easy viral video to make, because I've made several videos about NVIDIA, and they always do so well because the NVIDIA heads are like, oh, actually, it's NVIDIA, and it just like sets the comments on fire. It's if for those of you making content and you're interested in finance and economics and stock markets and trading and all that kind of stuff, just make videos on NVIDIA, but pronounce it incorrectly, and you'll do great. You'll blow up. Let me tell you.
Will, next time you need to apologize for mispronouncing it and read it in as NVIDIA, and then every single time just do a different pronunciation.
Just do a different pronunciation.
All video would be a good one.
Always apologize for mispronouncing the name and then say it wronger
every single time. Actually, that's a really good video idea, and I think it would probably blow up.
I think it would too. So your thesis maybe is what? In the wake of if people didn't see the video, everything in the market is up in the air, or maybe down on the ground would be a better way to say it. We filled that gap that you've been talking about forever. And I saw our partner and friend of the show, the White Whale, tweet that they are officially flipping their thesis and going short. You've talked about whether or not this is a confirmation that AI is not a bubble. I would love, since I haven't been here to talk it out with you, for you to tell me and everybody listening by proxy what you're kind of thinking and feeling. Are you going short? Are you long stocks, NVIDIA long, and then short everything else? How are we feeling? What are you thinking about in this moment?
Yeah, so I mean, I'm still bearish on the market as a whole right now, for sure. Unless, and if we're just talking Bitcoin in particular, unless Bitcoin can end this month basically above like $97,000 to $100,000. Just because if you watch my daily morning update video, it's just a really important structure for Bitcoin that's been in place, and I'm talking TA right now. It's been in place since 2020, and I'll show it on the big screen here in a second. I just got to clean up the chart. But basically, if Bitcoin can end above, let's see, yeah, like $98,000, we're still in potential bullish territory, actually. It's just that I just don't know if we really got that in us. So if I pull up the chart here and just make this super simple for Bitcoin, we're looking at the monthly chart, and Evan will share the screen for the folks over on TikTok. But this very simple formation, this, upwards channel, if you will, with these magenta lines that have been starting here back in March of 2020 for our bottom line of support, and the top line of support and resistance here starting in April of 2021. So the ETFs went live right around here, and Bitcoin has been just kind of going upwards ever since, with 2, now 3, 30% corrections along the way, which is exactly how gold behaved after the gold ETF, mind you. So actually, we're still in normal territory in terms of what we were expecting ever since the ETF went live, which is that Bitcoin will have 30% corrections along the way, but ultimately it's up and to the right for, in gold's case, 8 years. That's exactly what happened for gold. I would imagine if we're going to do something similar, it'd be faster. It'd be a shorter time period. But regardless, back to the TA. If this candle here, which is breaking this pattern, bearishly, can actually end the month of November, which is in 10.5 days, above this magenta line, we're actually in a period where, if we can just end anywhere around here, that's still a bullish confirmation of a bullish breakout of this. So, at first we tried to break out and then we failed, right? This was a false bullish breakout. And then if you have another false bullish breakout, that pretty much just takes this pattern and throws it totally out the window. However, if this monthly candle close can end above this, that's a confirmed bullish breakout, actually. So I just remain skeptical of the timing of this, because the odds of rate cuts on December 10th have really dwindled. It's at 33% chance right now, when it used to be about 70% not too long ago. And so you also have the stock market looking like it might roll over a little bit too. Yeah.
On the decline of likeliness that we see a December rate cut, what is it that's contributing to that, like sliding the opposite direction? Like what's making it less likely that we're going to see one?
I mean, you can totally blame the government shutdown. Okay. You can put full blame on the government shutdown, because what happened is, because the government shutdown was shut down for 40 days, we are not getting the October jobs report in the United States. Now, that's important because the Fed is looking at the labor market in the United States as the main reason for wanting to cut rates. And the Fed is very data-driven. So they have two things they pay attention to. They pay attention to short-term data, and they pay attention to their long-term forecasts. Their long-term forecasts are still telling them that the labor market is weakening in the United States and they should be cutting rates. That's why they cut rates the past 2 times, despite inflation not really being exactly at 2%. But the Fed minutes were just released the other day too, which disclosed the entire conversation that was happening at the Fed board the last time they decided to cut rates. And it exposed that the board was very divided on deciding to cut rates. And there was a lot of discourse about actually keeping rates the same. And so since there was a lot of discourse before and moving forward, we're not getting the data for the month of October, the odds are pretty high that the Fed will say, hey, maybe we don't cut rates in December and we wait to get more data to really analyze things and make sure we're making as much of an educated decision as possible. So let's assume that the government shutdown had never happened. Let's assume the October jobs data comes out. The data that we have gotten for the labor market has shown that the labor market is weakening, but without getting the official report of it, things are left a little bit unsure for the Fed. But if we had gotten that report, the Fed would go, I'm not quite sure if we want to cut rates right now. We're not quite sure. And then that jobs report comes out and says, hey, the labor market's weakening. That very likely would have been enough of a pull to get more members of the board to say, okay, fine, let's cut rates one more time in December here, and then see how things go and we sit on our hands for a bit. But without that data, because of the government shutdown, the odds are very high that the Fed says, hey, we're just going to wait right now. So that is why December 10th, when the Fed makes their decision, it's likely for them to say, hey, no rate cuts. That's a very, very, very likely time to see markets fall over.
What's funny is that I would be, I'm 100% in agreement that if you don't, well, bye-bye, Will. If you don't see, I don't know where you went, dude. You just
now. Oh no, he hit that damn hotkey again.
I hit another hotkey.
Okay, but wait, you know what?
On my mouse, there's a forward and backward button on my mouse, and I fucking hit it.
Whatever it was, it worked because now your video is crystal clear, and you're completely in sync. I've been watching you on a 5-second delay on the big screen the entire show.
Oh well, here we go. Lovely.
Fixed. I was just gonna say though that
fat fingers.
We don't see a rate cut in December, and I would bet you the market slides as a result, even though for the other rate cuts, it also slid as a result of those. So no matter what happens, just remember the market's going to go down.
Market's going to go down. Just know that, the effect of a rate cut, granted, a 25 basis point cut, which is just 0.25%, doesn't do a lot on its own. You need like a lot of them to add up. And also the individual impact of a rate cut isn't truly felt in the market for about 6 months. So let's just say the December rate cut happens, right? Or even if it doesn't, we have the effect of 2 cuts or 3 cuts that have happened from September, October, and December. So though the impact of those won't really be felt until early summer 2026, right? And that's just how long it takes for these things to really take effect. So if the market starts going upwards in the early summer or late spring of 2026, it's in part, right? It's not just one thing, but it's in result of the cuts that we've gotten over the past few months.
Excellent. Thank you for making the complex clear always, my friend. I want to shout out Josie in the comments, who broke a little bit of news to us about Pinlink. But first, let me say final thoughts as we pivot away from like the macro state of the market and these things. Anything else we need to be keeping our eye on or thinking about?
What I'd say right now is that Bitcoin is in prime bounce territory. I've been talking about how now that 92K gap was filled after 209 days. 209 days it took to fill that 92K gap. But hey, remember, gaps get filled. Why? Magic. It just tends to happen. For Bitcoin, it's literally about 99% of the time. There's only one gap on Bitcoin's chart that hasn't been filled. It's at 20K. And I don't think they're going to fill it. Send it. No. that only happened if Michael Saylor starts selling, I feel like. But yeah, so like this 92K to 85K range, we're in is prime bounce territory for Bitcoin. And I was talking about, hey, if we get to 90K, 88K, 87K, 85K, these are all key points that get stronger and stronger and stronger for a Bitcoin bounce. It looks like with yesterday's daily candle at 88K, that might be the bounce. We're starting to get a rounding bottom on Bitcoin. A bounce, I'm seeing some people, like Yoboyski is talking about like 103 to 105K. I'm a little more conservative on that. I'm saying like 97K to like 99K. I'm seeing a lot of stiff resistance there, but we could really see that bounce, which does put us in like, hey, maybe by the end of November, that monthly candle actually closes in that bullish scenario I was talking about. I remain highly skeptical of that, though. I would not be betting on that to happen. And if this bounce in fact does happen, me personally, I'm looking to deleverage some positions that are actually still in profit for me. So like deleverage and not deleverage, but de-risk a little bit and get a little bit more stable coins and let the market show to me that it's looking to be strong. So that's just what I wanted to add on before we change topic.
Excellent. Thank you, my friend. So Josie in the comments, shout out Joe, good to see you, said Pinlink recently removed all the liquidity from their token. And Alex, I know I saw you active in the comments, and I was pulling up some different research. I went to Bubble Maps to check on this. I went to Dex Screener to check on this. And then I went to CoinGecko just to make sure I was seeing this correctly. But I'm curious what you're seeing, because I'm not sure that I can really verify anything other than, you know, this token has been on the way out, dying for a minute. And we had another commenter, Shane Carr, ask, how do you verify transactions on the blockchain? So I kind of thought it'd be fun to verify and chase down this story in real time to see if we can't tell where the liquidity has gone. Mm-hmm. Does that sound good? I am going to pull up Dex Screener just because that's a good tool to teach you. If you're unfamiliar, this is dexscreener.com. And guys, feel free to jump in here and tell me where you want to take it, where you want to go. But once you get to Dex Screener, it has an interface that's not dissimilar to other crypto apps you've seen. They'll have a home page, a display with a search bar. And what I did was I went to CoinGecko.com and looked up Pinlink so that I could find its contract address. When you look up a token on CoinGecko, and maybe one of you guys could help me with a little screen share here, you will see a variety of information about the token. You'll see a chart with its price. You'll see its market cap. You'll see trading activity over time. You can toggle on and off between those things. No screen share? You guys?
Sorry. Hang on. No screen share?
Come on now. Help a brother out. You'll see a variety of different things, but what I want to draw your attention to is below, especially if you're on desktop. It might look a little different on mobile, the scrolling. You'll see an info tab with the smart contract address. Just like your wallet has an address on chain, smart contracts, the programs that have all the information about a particular cryptocurrency, how it works, how you're allowed to use it and interact with it, they also have address on chain. This is that address. Sometimes it lives on multiple networks. We can talk about later, but if you're trying to verify something on chain, you need addresses, because everything on a blockchain is just a record of accounts. My address, your address. I reassigned some Bitcoin to you. You reassigned some Bitcoin to me. You interacted with this smart contract and so forth. So the first thing you need to get is an address. In this case, we've got the address right here. There's usually a little copy button that I click. I take it back to Dex Screener because that's where we're starting our research here. I'm going to paste that in. And this is helpful because if I was to just type in Pinlink, I might get a lot of different results. And you're not sure which is which. This is one of the reasons that blockchain is helpful, because whether you're looking at a fungible token like Pinlink, or you're looking at a piece of art on chain, it would be really difficult if somebody copied a piece of digital art exactly like this painting behind me or the one behind Alex and put it on chain. You wouldn't be able to visually tell the difference because they would be identical. But when I search instead for a contract address, there's only one match. Now, in this case, it's showing multiple matches because Pinlink has different liquidity pools. But let's put that aside for now. And let's go to this first one, because a little checking, and I can see that it matches the information that CoinGecko presented me, a market cap of 10.8 million. And I look back at Dex Screener and I see, market cap of 10.8 million. That looks good. Now, Joe's claim was that Pinlink removed the liquidity. So it's possible that he's talking about one of these other pools, because guys, the first thing I'm seeing here is that this particular token has about $1 million of liquidity, which I would expect that's pretty reasonable for a token with a market cap of $10 million. 10%, that's fairly reasonable. Joe says he's looking at the third one down. Okay. So let's talk about this. Just based on this, I'm going to say this is for one particular liquidity pool paired to this token. Maybe Dex Screener will give us the address and we can see if it's different. Any thoughts on this or things to point out while I'm in the middle? Go ahead, Alex. Tell me.
So very clearly, one of the pools that is like published by the company pool that they promote and advertise, liquidity was removed. If you go to Pinlink's website, which
website
I can share here, or you can
take over the show. Swap me.
So here is,
and I've got it up on the Blockchain Explorer too, so we can go there next. This particular pool, when you're ready.
So pinlink.ai, and if you follow their own posted link here, which sends you to Dex Tools, Dex Screener competitor, and we share this instead, you can see that this one is a pool that's been drained. $325 worth of liquidity.
Okay.
It was so dead though that doing that literally only did this.
I thought at first it was that gigantic wick downwards.
And then this thing is dead. It's dead as a doornail.
That's the moment it happened there, Alex, that you're highlighting on that yellow thing?
No, that's something else. This is the moment right here.
Do you see the transaction there in the list of transactions below? Is it easy for you to tell which one it was? Because I'd love to answer this question of, how are we verifying that this happened?
Here. It's over three withdrawals. Not
Give a
very
little
much.
context for the people in podcast land.
So if you look down here, you can see just a list of transactions that have happened in and around this particular crypto, and what it is, buy, sell. Here was an ad where someone added a couple dollars worth for some reason. But right here, there's actually 5. Let's see. Yeah, that looks to be it. There's 5 starting on November 19th at about noon GMT, I assume. We just removed in 5 stages all of the liquidity from this big pool. So there's one other pool, the one that you were showing and pulling up there, that appears to also be a thing, same contract address, same, recognized pairing, with a bit of liquidity, but I don't know. Don't look, not a good look. I mean, it's dead as shit,
Yeah, it's super dead.
I'm going to pull up that other pool and see if it has. So let me just tell you this, from Dex Screener, that's one of the places I got the smart contract pair. So just like every token has a smart contract, it might also have a contract address for what's called its liquidity pool.
Wait, hold on. Will, what does the TA tell you about this chart?
It tells me that it was sometimes shit and then sometimes good. That's what it tells me.
Yeah, it tells me
right there.
Tells me somebody.
Anyone identify any patterns there? Sorry to derail you, Evan. That's just a really funny looking
You know what?
chart.
Sometimes it's worth setting a 100x long or short with $1. And at some point, sometimes it's worth it, I suppose. You might get lucky. You might get a candle like that.
Oh boy.
So if you're wanting to find more about the smart contracts, so it's not enough just to like launch your token on chain. Okay, that's easy to do. Anybody could do it. We could show you how sometime. What you need are these pairs that make it possible for people to trade other tokens for this token. That's how a token becomes worth something. That's how you create a market in this digital blockchain space. And often tokens will be paired with the coin of the network they're launched on in a liquidity pool. For example, this is paired with wrapped ETH because this is a token on the Ethereum network. Forget the wrapped for now. We'll talk about that later. But there are also popular liquidity pools for this token with USDT tether. We would expect to see that for pretty much any token because it's the most widely used and traded coin token. Tether is. So it makes sense. If you launch a token and you want people to be able to buy it, you'd pair it with Tether somewhere down the line. And it's not uncommon that there will be multiple liquidity pools for the same asset. A very popular asset like Ethereum, for example, or USDC will have tons of liquidity pairs, we call them. And these pairs, they have their own smart contract addresses, and Dex Screener's interface displays these things for us right over here. If you're on mobile, you just would like scroll below the chart. You'd see it's got Pinlink's contract address, it's got Wrapped ETH's contract address, and it's got the pair. Now, I've already done the work to pull up both addresses. The first one for that bankrupt pool, that's what opened this page right here. This is etherscan.io. And just like every blockchain network has a coin that is used to settle fees or that all members can agree is like the currency of the network, every network has at least one blockchain explorer. That's what we call websites like this that present the information that all the members of the network store on their nodes, but like in a human readable format. This is like the Wikipedia of blockchain. If you've got an address, you can look it up, and they have these helpful labels. Like in this case, they have verified, somebody has, that you can trust with a pretty high degree of certainty that this is the Pinlink deployer contract, meaning the person who launched this token, this is that contract. And you could verify that yourself if you wanted to by going into this address, looking at the transactions and cross-referencing them to things that Pinlink had said and so on and so forth. But we've gone over a lot of different tools today that'll help you verify things on chain that you may need some more help with. So I want to say, if you get to a page like this, you're trying to look something up for yourself, that is a great reason. Will, I'm going to stop sharing now, to come on over to community.rumshq.com to get in touch with one of us or somebody who's helpful in our community, because it can be overwhelming to learn all these tools. But just like any tool in your toolkit, they're good to have at your command and to know how to use when you want to. So head over to community.rumshq.com. You can create an account in about 2 minutes. Super painless, free, and easy. We've got step-by-step to get started. And we would love to show you how to use these things, whether you're just trying to track down a transaction that you sent to another wallet, or you want to look up the sausage, how it's made behind your favorite smart contract. We can show you how to do it. We would love to see you there. Gentlemen, have I missed anything in the comments? Or do you have any thoughts to add on tracking transactions on a blockchain before I take it somewhere else?
I don't have anything else about tracking transactions on a blockchain. I mean, I think you nailed just about everything. The only other comments in the comment section I would just highlight is, people appreciating you going through all that in the detail. Yeah.
I appreciate you. That's what we do here, man. We're here to break it down with you. If you've got a crypto question, if you've got a suggestion, you got a good joke or word of wisdom, let us know. Joe has the follow-up. Would this cause more drastic price movement because of the pull? Who wants to give an explanation of how liquidity affects price? Anybody?
Actually, it might almost do the opposite, especially in that pool in particular. It really depends on like where else liquidity lives for it, because in order for price action to change, you need to have the ability to trade. Otherwise, it will just decline based on people removing sell orders and all that kind of stuff, or posting new ones with lower and lower and lower targets. But no, I mean, if the thing is dead, the thing is dead. It's going to stop moving. There's no liquidity in there. There's no ability to trade it anymore. it can't move anymore because it's like the parrot in Monty Python.
I would liken it to a pool. The parrot.
Dead, deceased. It is no more.
I would liken it to a pool of water. If you imagine that traders are approaching a pool and they either have cups, they have vessels of water that are full or empty. It might be a cup, it might be a 55-gallon barrel, it might be a tanker truck. And they are either depositing water into this pool, that represents selling, or they are pulling water out of this pool. Actually, pardon me, strike it, reverse it. If they're depositing, dumping water in, they're buying. And if they're pulling water out, they're selling. The pool may be shallow, it may be deep. Bitcoin is like an ocean. I can go buy Bitcoin all day, dip my cup in, dip my tanker in, and not make much of a noticeable impact on like the composition of the pool. I won't make a very big splash if I just jump into the ocean. You're not going to feel it wherever you live on the shore. But if the pool is like a puddle and somebody wants to take out an ocean's worth of water, they just won't be able to do it. Or if they take out a cup of water from a puddle, that'll change the composition of the puddle pretty drastically. It might change the depth of the puddle. And that's how you can think about liquidity in a crypto market too, in any market. It is helpful for liquidity to have depth if people are actively trading and trading at size. The depth of the pool limits how much people can buy or sell at one time without just totally affecting it. That's why their removal of this liquidity is so impactful, because now anybody else who also wants to take liquidity out, you know, if you bought $1 million of this token way back when, you may not be able to trade it back for $1 million at this point. There's just not enough liquid in the pool. It's a good question, Joe, and I'm sorry to say, might be tough from here. Go ahead.
This is a change of topic. One, a little bit of macro news that someone pointed out in the comment section, because I was like, someone said unemployment came out a little bit worse than expected, and I was like, they didn't get an October jobs report, but we got the September jobs report 48 days late. And unemployment came in at 4.4% in the United States, above expectations of 4.3%. Unemployment is now at its highest since October 2021. That sounds scary, but 4.4% is actually still very low for general unemployment across the board, just FYI. But at least we got some unemployment data that's showing that the labor market got a little bit worse in the month of September, which is something that will increase the odds of us getting rate cuts, but we're still going to have that gap. We're still not getting the October jobs report. So, you know, I would say it's still very skeptical, but this will add a little bit of fuel combined with the really good NVIDIA jobs report, or not jobs report, earnings report, to boost the stock market and to boost crypto. So it's making our bounceable territory that we've been talking about here for Bitcoin even more bouncy, which then started making me chuckle, because like a lot of my timeline is full of people being like, wait, the white whale's bearish now. And I'm just like, bad timing. bad timing. I'm gonna have to send him a note and be like, hey, you might want to take a look at opening up a long or something on Solana. I also took a look at Solana's chart and I was like, might want to open up a long on Solana.
It's just like, it's weird. It's interesting to me that Solana hasn't had the upward movement or that euphoric feeling, but the fact that it's remaining like kind of where it is, or only sliding as far as it did comparatively, especially then given all of the macro news about its ETF and the next, because now there's another one, which is also apparently doing pretty well. Like it feels like the thing you're getting from that is just like, I don't know, I'm like deepening conviction there and extending timeline. You know, I'm less convinced of any like short-term anything, any direction, no clue, as I never do. But I don't know, the whole thing is like making me feel much more optimistic long-term for that network. It's just like, dude, how do you not win when you're setting up like this? It seems inevitable.
That also, in the short term, I could totally see Solana going to like 165, 168.
Oh, if it doesn't, I'm selling big.
Between now and December 10th.
Yeah, that'd be a hell of a swing.
I could totally see that happening. Let's see, that would represent from where price is currently, it's like an 18%, 15 to 20%, depending on where the resistance ends up falling. But yeah, that's what I see. I mean, I really see like we're in short-term bounce territory for sure, between that September jobs report, NVIDIA's earnings, what I'm seeing on Bitcoin's chart, what I'm seeing on Solana's chart in particular. It looks like we're about to trigger a long signal on the 8-hour time frame for Solana. BlackRock officially filed to to offer another product for their Ethereum ETF that offers staking. Hey, so the big boy BlackRock is finally looking to add staking to its ETF, which is big.
Yes, let's give BlackRock more of our soul.
Yes, do it good. It'll be good in the short term.
What could possibly go wrong?
You know something that's a big talking point here at this moment in the conference, and also it seems like across the broader crypto space, is more tokenized financial instruments like ETFs that are not just like of crypto assets, but ETFs that are actually on chain, or crypto style perpetuals for like non-digital assets. And I think we're going to get something like that in 2025, 2026. That was something I saw our good friend and correspondent Jeeves posting about. Was how
gotta get him back. It's been a minute.
We got to get Jeeves back now that he's minted a kid, and he's
minted a kid.
Very rare, I'm sure. Jeeves, we hope your family is well. He's been kind of bull posting about this. He posted recently. He said the breakout product of 2026, and he framed it as perpifying equities and ETFs biting into the retail side, which make up 50 to 60% of total volume. And honestly, perps have become a killer product for crypto because they solve this problem that perpetuals trading would have in the physical world that like option sellers used to have, which is like, okay, if I want to go leveraged long on a bunch of barrels of oil, then how does that work? Do I buy them and then physically transfer the ownership of them into my custody? Do I got to pay all these like shipping and storage fees? And then what if it doesn't work out and I want to sell them? Or, do I got to trust the guy on the other side to do what he says he's going to do? Tokens that represent physical things have much more velocity. They don't need to be stored anywhere because they don't physically exist. So I am seeing a lot of people talking about this. I actually heard a guy speaking about like TradFi tokenizing stuff. I was in line for this event yesterday. Stellar and Myosin and Zirian were hosting. And we were standing outside waiting to get in, just doing the, what do you do talk. And the guy behind me, the guy in front of me, we're talking. It was actually Will the Trill that we had on the show, Crypto Recruiter. And another guy who was like trying to use stable coins to help musical artists get paid. And then the guy behind us were like, what do you do? He's like, I'm trying to tokenize timeshares. And tell me why. I was like, oh no, like timeshares has finally made it to crypto. Like we're really in trouble now.
It's over.
But I was actually saying to the guy in front of me, like, maybe that actually is a good way to do timeshares better. Maybe it'll be easier to get rid of them if they're a token, or maybe still like your favorite meme coin.
Let's open up leverage trading on timeshares.
Leverage trading on timeshares. That's just
what the timeshare market needs.
Yeah, he was saying the guy in front of me, the music guy, was saying, well, actually, that isn't a terrible idea because he wanted to start. Sometimes people in Web3 are often nomadic. They're traveling around for work or for conferences. They can live remotely because they tend to work on the internet first. And he was saying that he and his friends had more than once been to a place and said, like, man, we could just stay here. And he said, we wanted to start a DAO that was like, we could just stay here DAO, and it would be tokenizing different properties and having a crypto community of people who wanted to stay in different places and then could easily transfer ownership or share ownership of properties, So maybe could be the move, man. Want to start a timeshare company, guys?
Yeah.
I think I'm okay.
Absolutely.
I think I'm okay.
Okay, we've got a good question from Magic here, but Will, I know it's time for you to ride your dog and pony into the sunset for the weekend. Yeah. So have you got a final thought? Is there a good joke you want to share or anything else before we let you rug yourself with a hockey one last time?
I was so tempted to actually hit the hockey. Actually, yeah, but the goal. I don't know. All I'll say is, everyone, once you build conviction about like the market being bearish or bullish or something in one way, change your opinion if the data you get ends up showing the opposite, right? Don't. There's like a certain amount of pride that gets in the way sometimes of trading, for sure. A lot of the times it's like, well, I want to be right. It's like, who gives a fuck about you being right? You're here to make money, dog. So like read the data as it comes in. Yeah, it's just something that like I'll change my opinion. I'll see some data and go, oh, hey, that's a little bit different, or that's happening sooner than I thought, and change my opinion. And then there'll be just like a lot of discourse, just like people diving in, being like, oh yeah, you're bullish now, and I'm like, well, yeah, this data's right here, so I'm bullish or I'm bearish, right? So it's just kind of always been like an odd, silly reaction to me, but. There's a certain amount of pride that makes you want to like stick to your guns, be like, no, I want to be right. I'm like, no, don't. Who cares about being right? We're here to make money, So that's just one thing. Don't let your pride get in your way. Again, your emotions are your enemy when it comes to making money, 9 times out of 10. So just guard against that. Fear of missing out. Watch out for that. Fear of being wrong or want to be right. Watch out for that. Sometimes being too afraid because your last trade you lost, of like entering into a trade, even though it's a good setup, it's a setup that you've made money on before, but you're afraid because you lost your last one. All of these things. Emotion is not your friend in trading. So that's just the one thing I wanted to say. And then I'll head out and I'll see all of you amazing people on Monday. Hope you have a great weekend.
Beautiful. Ladies and gentlemen, he's your friend and he's mine, Mr. Will Watson. Thank you, Will.
Hi.
Only a fool rides off on a horse called hubris. That was a really good lesson. Now, if you've got a question, we've still got time. Alex and I are happy to ride this show home a little longer with you. We are not going to do, or at least I am not going to do, a circle after show today. Alex, maybe we can talk about it in the private chat. I'm sorry, I forgot to say that. I know I really miss it, but I've got to go off to this talk. So are you and Tori hosting an after show? And if not, don't fret, don't sweat. He says no. Okay, don't worry. If you're in the community and you want me to open that room for you, I would be glad to do it, because it is a good idea to talk with other crypto users and share your experiences, which is exactly what Magic is doing right here, and is the kind of thing we try to do in our community all the time in more and more ways. So once again, let me remind you, community.rumshq.com. If you're listening now or in the future, that's the best way to get into a deep conversation like this, to learn how to do one of these things. And Magic asks, if you're doing some DeFi stuff on a protocol, say Aave, lending some USDC, or you're staking on JITO, if you disconnect your wallet and then your wallet is compromised, how do you go back and retrieve your assets from those protocols? This is a really good question, and it doesn't have one straightforward answer.
Kinda.
Okay, let's talk about it. Give me the straightforward answer.
As fast as you possibly can, get everything you can out of that wallet. Do not delay. If it's it depends how it's compromised, but if it's compromised in the sense that like your key is gone or someone else has access to the wallet, get everything you can out of there as fast as humanly possible, because it doesn't matter if you disconnected anything from anything. If you have control of the wallet, you can reconnect to anything. Anyone can look at that wallet's history and see where all it has been doing anything. And if it was me doing the stealing, I would do that, and then I would go check every single one of those platforms you've interacted with and see what I can withdraw and then take it. So if you know your wallet was compromised, you are on the clock. Get everything you can, get it out of there as fast as possible, and then never touch it again. But it's probably a wash.
Yeah, the way it works is when you deposit funds into Aave or into JITO, you're not sending them to Aave. You are minting tokens that represent your claim on the assets that have been temporarily reassigned to the pool. And those tokens live at your wallet. Like, they are assigned to your wallet address. They live on the blockchain. They're assigned to your wallet address. So if your keys get compromised, so potentially do your Aave derivative tokens or your JITO, your JSOL, the receipt token they give you. And if you log into that wallet to find they're gone, I'm sorry to say, you're out of luck, Chuck. Alex, the thief in this example, would probably want to either move those tokens onto his own wallet or redeem them and then move them. If it was me doing this, I would move them to a different wallet and then redeem your Aave deposit from the wallet I totally control that you don't have a seed phrase for.
Yeah, and it's worth noting too, I've seen wallet exploits wherein someone who gains access to it then installs programs, scrapers, wherein anything that then gets deposited into that wallet later is automatically withdrawn to a different place.
Yeah.
And you don't want to fight. You're not going to win if you fight that, unless you are also able to build a better scraper or something like that. So the wallet's a wash. You're on the clock. The second you realize it's compromised, time is of the essence. Go as fast as you can, get everything out.
Yeah, so I would, if you suspect a compromise, like Alex said, you maybe you see you've clicked the bad link, you know it's a bad link, and you're like, oh damn, I got to do something fast. Immediately transfer all the assets to a new wallet that you full control. And I, would send them in order of what's most precious and what's most important to you. Your biggest bag, probably. Do as much damage control as you can, because that's where the hackers are going to go first. Mm-hmm. And then potentially you could go to a website like revoke.cash and revoke any malicious approvals that you've granted if the wallet wasn't like fully compromised.
Like, but if the key is gone, you can't do anything.
Right. If you gave up your seed phrase, you're done. You backed your wallet up on Web3 and entered your seed phrase into a bad wallet. They got every single private key your wallet could generate, and it's toast. So the attacker could come back hypothetically then.
Yeah, wallet's dead. Don't touch it.
Yeah, don't use it again. The Aave is like putting money in a safe. JITO is like putting money in a safe, but the key to the safe is your wallet. And if someone steals that safe, they can open the safe anytime. Disconnecting it doesn't hide you. It doesn't protect your safe. That's a really good question. Now, the follow-up question, Magic, is did this happen to you? Because, we want to walk you through it. And I will say too, while we're talking about it, extra special shout out to Magic for being a premium member of the community. Thank you for supporting the show. If you're interested in accelerating your learning journey, getting faster priority responses from us and free coaching at office hours, discounts on all the things that we sell, the free stuff isn't enough for you. The trick is become a premium member, because you get all kinds of exclusive access, and then you also get everything we sell for cheaper. So thank you, Magic. Thank you to all the premium members. You guys kick butt. Magic says, no issues here. Just wondering, last night as I was listening to After Dark, how was After Dark? I'm so sorry that I missed it, brother.
Lonely.
Oh no.
Doug joined for a little bit. In true Doug fashion, he jumped in and said that he was, what did he say? He was throwing out a prediction for like a 3 to 7 week recovery window, relief rally, but he had to go before he could give me any details about it. And I was like,
that sounds exactly, I can picture Doug being like, okay, here we go. Yeah, I've got this set up. I really see it. And then, whatever you do under any circumstances, wait, sorry, gotta go. Talk to you later,
Yeah,
did his TA chart and then said had to leave. Oh man.
It was good. Just did some Q&As, did a little blockchain exploring. It was good. It was all right. Missed you guys.
Missed you too.
Great for the band to be back together after everyone's chaotic last month. After you're ready to move back to the United States, at what point do I say you live there now? I feel like you've been there forever.
Dude, that's what my bandmate Sarah in the 80s band, she sent a text to me and Kim yesterday just asking an unrelated question, but then she said, I feel like Evan has been gone forever. And Kim was like, yeah, here, she sent her some pictures of some of my adventures. It does feel like forever. I'm ready to be back home. I'm ready to be in the home studio. We are going to Michigan for like a week in December, so I'll be out again for a moment, but I am so looking forward to just being at my desk and getting through some of the work to like map our hotkeys, take the production to the next level, and especially really to like make more content. I haven't made a TikTok video in like 2 weeks, and it's just because I'm busy. Yeah, right. I'm trying to.
I've made like 5 in the last 6 months.
I really want to though, because especially now that we've got these great sponsor partners, there are so many cool things I want to showcase that will teach people how to use crypto through the cool tools that we've built relationships. I really want to build the Rise Up scholarship pools with Unlock. I want to create a sort of membership, as it were, just a pool that you can contribute to that will allow us to help fund scholarships for people who are going to take the upcoming live cohort we're going to do, that can take classes for premium memberships. I also think it'd be really cool to just do scholarships for micro grants. You talked about this a lot, Alex. There are a lot of people in our community who are, or who want to be building something, or maybe who want to take a course that we don't offer, who could travel to a conference, who could do something that we could help make possible for them, all of us. I think that would be great. And to do it on chain with our partners at Unlock would be absolutely amazing. So top of the list, doing more content. We do have a few follow-up questions. These are really good. Papa Aztec, hey brother, asks, what happens if this compromise situation we're describing happens to a wallet on Phantom? Compromise my Phantom wallet. Can I just create a new wallet and move assets to that? And let's answer this question, Alex, from the perspective of not every wallet works the same way. Do you know do you want to explain first like what it is, or do you want to answer the Phantom question first? Because I feel like on Phantom specifically, it is okay. And if we don't know for sure, I can verify.
Yeah, I would say that I don't know for sure. I would look that up specifically, but I would probably, like, my gut would say that I would be skeptical about what I think this question is asking is if we're still safe to use different accounts tied to a wallet. And I don't think so. My gut says no, I probably wouldn't. But you can absolutely continue to use Phantom in general, right? Like the platform itself is fine. You can use it to create a fresh wallet, fresh seed phrase, all that good stuff, transfer to that.
Yeah, the basic rule of thumb is if you are generating, wallets often have, the interfaces often have like one of two ways to do it. You can generate a new wallet or you can generate a new account. And they might call this something different on your particular wallet. Essentially, a new account means separate keys tied to your seed phrase. Like one seed phrase can be what we call hierarchically deterministic, which means you can use it to generate many sets of keys that can be recovered with the same 12 or 24 secret words. But the create a new wallet option often generates an unlinked wallet, a totally different seed phrase for you. And that's what you're looking for. You're looking for whether or not the feature on your particular wallet, like Phantom, does that generate a new account from the same seed phrase? Does it generate a completely new seed phrase? If it's the same seed phrase, like they don't give you another seed phrase, you can assume this is just a new account. And if one of your accounts tied to that seed phrase has been compromised, or you gave away your seed phrase, every wallet you might generate is compromised. You need to generate a totally separate new seed phrase, safe, unlinked wallet. Even if it's in the same app, that's when it's okay. So, Alex, did you happen to find whether it happens on Phantom?
No.
I've got it here. Add or create wallet. That is the same seed phrase. They have an option, add a new secret recovery phrase. This generates a new wallet, okay? You'd go to the settings, create a new wallet, add a new secret recovery phrase. On Trust Wallet, they have it as add a new account. That's the same seed phrase. Or create a new wallet. That's a new seed phrase. That's the safe one. Same thing for MetaMask. MetaMask also uses that language, add account. No. Create new wallet? Yes. So good question, great distinction, and I hope that helps. So the other thing is, if you compromised your wallet because, for example, you put your seed phrase on like your phone and your phone got compromised and that's how you back stuff up, then maybe not a good idea. We always recommend that if you're a serious crypto user, you don't put like anything other than your walking around money on a device you use every day. You might think about getting a separate phone, a separate computer that you only connect to crypto wallets on like trusted Wi-Fi networks for the Bitcoin you're holding for retirement, that kind of thing, those keys. That's a good feature. I actually got a video from Joe yesterday. Hey, Joe, who shared this creator talking about how what they like to do is they like to create a wallet, then remove it from the device to make sure they backed up the seed phrase correctly before they put anything on it. And once they've put things on it, they also remove it from their device. So there's no chance that if the device gets compromised, their wallet app gets compromised too. I thought that was an interesting approach and, really smart.
Yeah, add some hurdles to it, but more secure.
Definitely more secure. Other thoughts on that?
I think I'm well met.
I think you're well met. Dude, somebody said in the comments, mining crypto in mom's basement, crypto basement. What an apropos handle. Do you know, I learned recently that one of my friends who runs a big apartment building in Memphis, who's a crypto OG, before they were renting those apartments, he had them like full, this whole building with ETH miners back in the proof of work days when it paid to be mining ETH. And I was just thinking to myself, wow, What an operation. Can you imagine being his friend and like walking in and being like, what are these computers doing? And not knowing anything about crypto and being like, yeah, they're paying me. I'm securing a network state. Wouldn't that have been so cool? Ugh. Okay, if you've got a question, a suggestion, a good topic for a marketing hackathon or a word of wisdom, something else that you want to share, let it be known below, or leave it in the comments for the future. Sonoran says, I lost a Uniswap wallet because I didn't back it up. Ooh, painful.
Mm-hmm. Yep,
Was up 123 says, I have a question, and we say, go for it. Do you remember the SpongeBob sponge treatment? What an odd question to ask. Nope, I don't.
Context is missing. I feel like I missed some important information.
Crypto Basement says Zcash mining crypto. Okay, mining Zcash in mom's basement. That's interesting. We were talking about this a little bit, and I expect it to be a source of conversation across the shows that you might choose to watch to learn about crypto or social media. I really think more and more we're going to be talking about privacy tokens, privacy coins. Zcash will probably remain a prominent player in the narrative. And I think ETH is re-entering the conversation. Vitalik made an announcement in addition to that talk I told you guys about the other day where he kind of broke down the whole thing from a basic perspective. He gave a presentation on Kohaku, which is ETH's next big upgrade. Usually every year or two, they have these big upgrades like the merge. And Kohaku is one that's going to enable privacy on ETH. And there was another presentation by, I can't remember the guy's name now off the top of my head. It's another fellow from the Ethereum Foundation that is basically like, fact check yourself, brother. The ag layer vision we've talked about with our partner Polygon before to unify liquidity across layer twos. This is another thing everybody's doing. Polkadot's trying to do this. Arbitrum's trying to do this. Polygon has a strong head start, but it seems like ETH is going to make it easy for you to sign a transaction that will allow you to do a swap, a bridge. You got an asset over here on ETH or one of the L2s, and you want to do something on a different network that is EVM compatible. They're going to make it instantly possible for you to do that. I don't remember what the feature was called, but those are two big upgrades. I expect to see more interoperability, more privacy, and all of it to help us build tools and infrastructure that will support a new civilization. That's like the conversation here. I couldn't be more excited about it. Papa Aztec asked us, what's the biggest issue in crypto right now besides rugging? And I would say, Alex, that's it. What would you say is the biggest issue, maybe the biggest obstacle or the biggest opportunity for the crypto movement right now?
Shitty optics, corporate greed, and venture capital pollution.
Venture capital pollution, by which you mean like toxic. The fact that
the VC model as it relates to tokens is unbelievably flawed and slanted and doomed, and yet we keep doing it. And then corporate greed, the only regulation that we've gotten is empowering American corporations. It does absolutely nothing for the industry. And the next best thing is what? The Clarity Act, which is like currently fragmented into two different bills that has almost no hope of passing in any sort of current iteration. DeFi has been removed from it completely, and it's mostly just like arguing about the CFTC. And there's still no end in sight for like the double tax conundrum or anything like that. So that's a problem. I don't know. We as an industry are actively selling our souls to giant corporations, and that's the biggest hurdle that the industry needs to face. Plus, we've done absolutely nothing to fix or even work on the shitty optics. I mean, if you want proof of this, and take a deep breath before I say this. If you look at a recent Aaron Parnas video talking about the Trump family crypto actions, just read the comments. And that will paint a pretty vivid picture for you of another massive hurdle that the industry is facing. You can think literally whatever you want, but that's the way that most of the world is looking at it. So I think those three things are massive hurdles.
I have several questions in the comments that we're going to get to, but I need to ask you a follow-up question because I think I have a shifting opinion. I actually think venture capitalists might be better when they work well for our industry than, say, going directly to retail. I think the true problem is founding teams that through naivety or through bad intention try to bring a product to market that isn't going to make it. Like by nature, most startups are going to fail. But I would say the crypto space especially is full of people launching projects that are reductive, that aren't a good fit for blockchain because it's nascent. Mostly just because it's nascent and they don't know enough to know better.
Okay.
And
extractive for extraction's sake, not because you genuinely believe it has a shot.
Yeah. Okay. So like story protocol is one we talked about before. Remember, you were bullish on the concept, and I'm bullish on the concept too. A blockchain
for the record
for IP. However, I was like, oh, this doesn't look like an investable thing for me as a retail consumer because of how top heavy venture investments specifically had made it. And they had great partners. They had A16Z on their cap table. So what I would say is, on one hand, a venture capitalist like A16Z is prepared to write you a check and then connect you with good, potential hires, connect you to other resources in their network, legal and professional resources to talk about you. They have like the infrastructure to write you a big check and then wait 10 years. They don't need to sell your tokens the second it's available for them to do so. Then there are other venture capitalists maybe who, because the startup founders don't know better, can't get access to A16Z. They take $1 million from somebody who's going to sell on day one. I would say most of the top tier venture capitalists like A16Z, Dragonfly, Paradigm, they are like in it to win it with their founders. Then there's those, slimy ones. But I would say that the alternative is like bootstrapping, which I think would be the best case scenario, meaning you build something entirely with funding yourself so you don't have to sell equity or take outside input. Go ahead. You were going to say something.
Yeah, I don't know why we haven't really tried a Web3 Kickstarter.
Now, hang on, because that's the third part. Here's what I think. I think at least our meaningful attempts at this so far have looked like the IPO boom, more well known as the ICO boom. IPO stands for initial public offering. ICO stands for initial coin offering, which is in 2017, all these alternative cryptos, it started with Ethereum, but many others did it, sold tokens that could have been classified as securities directly to the public, often before they had any product or chain network to speak of. And this is what Alex is describing. And often what happened is, if you look at the charts from that time, most of these tokens, they started here and immediately cratered, because what I would argue, Alex, Echo.xyz has done this. Now Coinbase is doing this, like these direct to consumer sales. I don't think they have a good model for vesting. Like when you sell tokens to a venture capitalist, often they have a vesting schedule, or even project teams. We're going to get 20% of the supply as the founders of this project, but it's going to be released to us a year from now, 6 months at a time, so that we can't just dump it all on you and go away. It aligns the incentives of the venture capital partner or the founder, the team member, with people on the other side like us who might buy the token. It keeps them working for it. But a public sale often doesn't have that. So like these people like you and me who are buying the token, most of them are buying it not because they understand venture or because they actually want to support a startup founder. Let's be frank. Most of them are buying it because early access to a token is the best way to get a 2x, a 3x, a 5x, a 10x. Most people who bought Pinlink when they heard about it bought it because they wanted to see a big return, probably not because they thought it was the future of the technology. And because retail investors aren't given the same guide rails, like you can't sell this thing, it has to vest first, most of them leave because they're just in it for a quick flip.
Well,
I agree with you, but we need a better model is what I'm saying. And I think maybe like well-intentioned VCs for now has been the best model that startups have had, aside from when they can bootstrapping.
I just don't think it really matters ultimately, because you have a dopamine acquisition crisis facing humanity at large that I'm not kidding, that drastically impacts your attention span.
Tori, can we put that in the title? Dopamine acquisition crisis?
What I mean is, look at quite literally everything, right? Like your attention span in every capacity has been diminished due to, the way that dopamine is given to you, or, doled out through social media primarily. So that translates into crypto as well. It's affecting marketing across every industry that needs to advertise anything. The quality of the attention doesn't matter. The American Eagle CEO, when asked about whether or not he had any rethoughts or anything about the whole Sydney Sweeney ad, he said, well, it was great for the stock. Only thing that matters.
Yeah.
Don't give a shit what your customer base thinks. Don't give a shit who you alienate. Don't give a shit whatever. It was attention, good or bad. It impacted the stock price. He doesn't care about anything else. That translates into crypto as well. You can have a well-intentioned VC all day long who is intending to fund you and die on the hill with you and connect you to everything and everyone that they can. And all these things are great. And then the market makers can come in and say, hey, that's a cute little project that you have there. It'd be a shame if I took a fat shit on it and extracted everything I could from it and then punted it because, oh, look at that. There's 28 million people right behind you in line ready to launch the same exact thing. I mean, there was a question, do you think that because exchanges make money from tokens trading that altcoins can never die? Two-part answer. One, no. There are so many of them that there's literally a never-ending supply of things to trade. And once that initial hype is gone, it's gone. It's so hard to make someone care about something that was never truly exciting in the first place the second the shiny toy syndrome wears off.
Yeah.
So, in that sense, no. They are incentivized to kill it and onboard a new shinier toy, extract from that, kill it, rinse and repeat forever. It's a great business model. They're making money hand over fist doing it. The only person who suffers in this is retail, because you find something that you think is cool and you want to stick by it and invest in it and hope for the best and whatever, when in reality it was never going to do anything more than a quick flip and a dump forever. So I don't know. I just think I don't disagree with you. I just don't really think it matters.
Yeah. But you think a crowd-funded model would ultimately be like the better version of how we get ideas off the ground?
Yeah, why? You don't need to involve them at all. But the shitty part is that even if you did that and even if it was better, market makers are still there. So the ultimate answer is we have to fix the way that market makers operate. That would be a piece of helpful legislation that some person in Congress could decide to work on.
Okay. So I agree with that, but I want to push back a little. I agree we need better guidelines, better rails for pretty much everything. Like the comments are full of rug pulls suck. And market makers, by and large, do get a notorious reputation for taking. But I also think they provide maybe one of the most important services in crypto. Like the fact that you can go online anytime, anywhere, and there's somebody waiting. You don't have to have an order on the other side that exactly matches yours. The fact that there are these pools of liquidity that somebody risks their money to provide you,
but
so that you can have instant liquidity and transferability of an asset like that. That's a pretty big innovation.
Sure. But you're looking at this through rose-colored glasses, because in theory, that's great. In practice, it doesn't work that way. In practice, the people with all of that money are very comfortable sacrificing some of it to make more. Yeah, there you go. Put them on. There they are.
Now I'm looking at it through rose-colored glasses, Alex.
It's just one of those things. We can decry the idea of regulation all day long and say that it quells innovation, and it's very possible that it does. But also at the end of the day, I hate to break it to you, it's the thing that keeps the little guy safe more times than it doesn't. Now, this is not that's a generalization. There are, of course, terrible rules that keep people shackled in bad situations that need to be fixed and removed and gotten rid of, whatever. Again, the inability to recognize nuance is an epidemic facing humanity, in addition to the dopamine acquisition crisis. But there's just nothing there. I mean, these groups, these market, they can do literally whatever they want, and they do. And more times than not, it is in an effort to extract and to make money, because that's their goal. They're a business. They're not an altruistic service. It's not a nonprofit. It's a business.
Yeah. And I get it. I have big problems with that. I think the whole capital system ultimately makes everything come back to that. And I think it ultimately is extractive. I'm saying, just for the purposes of if that's the system we have, what makes it function well? I'm the ultimate devil's advocate right now. I think market makers in a system that is broken at least make the broken system run well. And somebody asked the question that I want to just explicitly touch on in this context. They said, like, do you think most altcoins will never die because exchanges or whales or market makers have a vested interest in, making money off that's how they make money. They make money when you trade a token, they earn a cut of the fees. And I think what we're saying is a lot of these altcoins will die and they will be abandoned by market makers. Like Pinlink is not going to be something that a market maker or an exchange tries to keep alive. No. Why? Because they've got money. They've got other tokens.
They have ICP.
Exactly. They've got other tokens people want to trade. And that's where it costs them really nothing to just pull their own liquidity from those places. It is in their interest to go where liquidity and volume are highest, deepest. Even though there is some incentive for them, if there's a hot new token that has shallow liquidity to provide it, that's riskier. And they're not going to stick around after the activity's gone. They're not going to try and bring it back. It costs more for them to do that. The same way it would cost more to keep building new roads to a theme park nobody wanted to go to. Nobody is like actively working on the parking lot at the mall that nobody shops at because it's just not profitable for them. I like when we have, this is not a spirited disagreement, but it is a really good discussion that gets to the nuance of, what needs to change in our industry. Do you have any more thoughts on it? Because I feel like I might have rugged you by sharing that listener question. I have a couple more questions on deck from the audience, but please, if you've got more thoughts on this.
I think it's, it's like with anything. You can take a system that was designed for a purpose and explain to me if it worked in a vacuum, in an ideal set of circumstances with people who acted the way that they are supposed to, according to the rules, then yeah, it would be great. In theory, so many things are great. In theory, communism could work. In theory, capitalism is the best ever. In theory, like so on and so forth, insert literally any system ever conceived by man here. And then inject human greed into the equation. And all of a sudden there will be the potential to exploit it, which is where guardrails come in. The problem is then, of course, with the people creating the guardrails. What's their incentive? And it's just all inherently flawed. I mean, you of all people have to recognize the inherent flawed nature of building incentive structures in general, because we talk about it all the time. And it's another one of the things kneecapping the industry is flawed incentive models. I mean, government is a great example of a flawed incentive model. There was a really great little soundbite moment yesterday. I don't even remember which congressperson it was, but he was talking about, the need to finally do away with this insider trading nonsense in Congress. And this was a Republican speaking. And he was like, we love to demonize Nancy Pelosi for it, but in reality, she's not even in the top 10. And I just think that, she's made a name for herself. And, she's the famous one. I would argue a lot of that has to do with the fact that she's a woman. But at the end of the day, those are the people creating the guardrails that are supposed to help the systems we're talking about function. And they don't do a good job because they have their own motives. They're paid by their own people, whoever. And I don't know, I agree with you. In theory, yeah, it's a great model. In practice, it usually works to take advantage of all of us.
Yeah, it's the truth.
So okay. The cherry on top would be to answer the question, will altcoins die? Yes, all the time. But there's a few, the golden children, who have managed to cement themselves in the zeitgeist of crypto that can stay alive forever, even if the project never does anything. Look at any of these things. They can literally do whatever they want. It doesn't matter. There's going to be a group of people who love it and trade it forever. Exchanges can make money off that till the end of time. XRP, ICP, Cardano, Polkadot, all these things are titanic, gargantuan. They have people. You either love them or you hate them. You're either shorting them or you're longing them. Whatever, they make money off of those things. They don't care about the little tiny piddly things that launch and flare up and they can make a quick buck off of, and then they'll let them die. You know what I mean? There's two different, very distinct categories of altcoin there. The ones that are doomed forever and the ones that will probably just linger and, not do anything amazing. And then of course there's the ones that work.
So we've got a really good question about tokenomics, and I feel like it fits right at home in this conversation. Alex, can you give a succinct definition of what tokenomics is? And I will introduce this question.
What tokenomics is?
What is tokenomics?
It's the basic structure in which a token plan is built and executed.
Okay.
Yes.
Every cryptocurrency token has one of these basic plans.
Yes.
And it's that smart contract thing I talked about earlier. This outlines the parameters for how much of a token there is or will be, how it is brought into existence, who has authority to do that, and it sets out other parameters for how the token can be used. Tokens are like words. And the same way you can use language to create a poem or to explain something or to persuade someone or to name a thing and express your identity, tokens can be used notoriously as money. They can be used to communicate about identity or maybe the provenance of something like a painting, where it came from, who created it, who has owned it in the past, a behavior someone has taken, and all of it will help us align our values and coordinate at scale the way language does. So the tokenomics is really important because it outlines like what the token's life could potentially look like. It's like a container and parameters for how the thing will live in the world. For example, we had a really good question from WasUp123 over on Twitch. Hey, what's up? Good to see you. Asking, isn't the owner of Bitcoin anonymous? A lot of people wonder if Satoshi Nakamoto, the creator of Bitcoin, owns it, and if it's trustable because it was created by someone anonymous. But the great thing about it is tokenomics in this place have more of an impact on Bitcoin than who or what created it, because we can see that that person does not have any more influence over the protocol of Bitcoin than I do, than you do, than Alex does. The tokenomics is what we can look up and verify. One characteristic of tokenomics is that just like anything on a blockchain, it's verifiable. And on a decentralized network, meaning one where no person or entity owns everything, the tokenomics are difficult to change by power. If we wanted to change the Ethereum network, we could all vote on a proposal to change it and make it happen. It would be very difficult for a company or entity to co-opt. So, Alex, in terms of tokenomics and design, I think this person who was asking wanted to know maybe like, how do we evaluate if a project has good tokenomics? And I kind of feel like that's like evaluating is a particular piece of writing good? And you have to ask first, like, what is the goal of this piece of writing? You know, is it a novel? Are they trying to tell me a story? Is it a technical manual? You know, what do you think? Is that a helpful place to start when we think about tokenomics?
I mean, yeah, it's a really hard question to answer because it's subjective. Yeah, I would say that honestly, I'm trying to think of like a way that I could succinctly answer that in general. I don't know. I guess you would really want to see that thought was given to the things that we have known and seen repeatedly to go wrong. You mentioned like vesting. A vesting schedule would play a role in the tokenomics of a project. Like that's a piece of the tokenomics equation. So, you know, something that has venture capital interest, investment, KOL round, and a public sale needs to have a solid, secure vesting schedule. Otherwise, it's just like so sus. It's not even worth thinking about. So little things like that, I guess, could be like kind of universal rules that you could apply to it. But in general, it really, really, really depends on what the token is and what the point of it is. Because, for example, Bitcoin's tokenomics versus Ethereum's tokenomics. Two extremely different goals. They're very different models. Both work for the token in question. You know, Bitcoin works because of the scarce supply, the hard cap on total supply, the halving schedule, the rate at which it's mined, all of these things. Scarcity underpinning the whole thing. Ethereum works because it's easier to get. And because it is a consumable resource, because it is used to execute things in the network, in the ecosystem, it needs to be more plentiful. If there was a hard cap on the total amount of Ethereum that could exist, your only two options are that one, you eventually run out and the network can't function anymore, or two, it becomes so expensive that it's cost prohibitive, which is kind of one of those like, you know, interesting things that you can discuss about price action and like usability of utility tokens. But so yeah, you're right. It totally depends on the token in question.
So that's a really good example too, because we had a follow-up question from Tom, Tom, my friend from MySpace. Oh my gosh, we have a celebrity in the audience. I can't believe it. Thanks for being here, Tom. It's been a long time. Good to see you. When all tokens are released, does a crypto project die? And that depends on like the plan for the tokenomics. The short answer is, like Alex just explained, like, no, not necessarily. It does remove a source of inflation, and that would probably force a project to rely in some degree on the fees generated, the demand, the ecosystem strength, but it depends. For Bitcoin specifically, this is the clearest example of a project that would probably thrive after it's released. Think of Bitcoin like a tank of water that is emptying at a slower and slower rate over time, that will never be refilled, and more people, because of this, want to drink. The emission schedule is known, the supply is known, and when the last Bitcoin is mined, no new Bitcoin will ever be created. But Bitcoin's not going to die. The incentives will just shift. Miners, instead of earning Bitcoin rewards, will earn from transaction fees, which probably at that time will become significant. It will probably not be as easy or as cheap for people to transact on Bitcoin, because presumably it will be, scarcer than ever. The security of Bitcoin will be sustained by user demand. As long as people want to transact with or hold Bitcoin, those miners, they will be compensated. And it continues to remain scarce, neutral. It doesn't live like Ethereum, where you need tokens to like power an app. And so that's a great counterexample. Ethereum already operates as like a post-inflation asset, because more ETH is destroyed than is created during periods of high usage. So it is often deflationary, meaning the supply is shrinking over time, and that strengthens the value for people who want to hold and use it. The fees, gas fees, those are paid to the people who maintain the network. That powers the ecosystem, sustains the validators, even if there's not like a heavy issuance, even if it's deflationary. And people actually use the network because of DeFi, because they're using layer 2s, they're using stable coins, enterprise apps, roll-ups. Ethereum has structural demand for people who need to do things. So real activity makes it stronger as inflation drops. Alex, I don't know what you'd say, but like when a project dies after tokens release are usually if the tokenomics were covering up a weak product. Like how many times have we seen a project with no demand say like, hey, we're going to do a burn. We're going to buy back a bunch of tokens. And it's just like, that's a momentary thing, trying to attract liquidity or new buyers or something, a hype cycle.
Yeah. There was a question in the comments about analyzing good projects. And we've talked a lot about now or lately about how fundamentals don't really matter as much in a market that's this manipulated. But I kind of believe that the only way that you can really assess whether or not a project has legs at all is just to answer the product market fit question and determine whether or not it's achieving any kind of adoption with its target audience. If no, if the answer to that question is no, but the price is going up, then it has achieved speculative interest, which is short-lived. So, get in, get out quick, try to make your money, whatever. Don't be surprised if you get rugged. If yes, maybe invest conservatively and then strap in for a long, tough road.
Yeah, this is why tokenomics can't save a bad product. Like, it doesn't matter how good your tokenomics are, they're not going to make your thing nobody uses like the future. But well-designed tokenomics can amplify a good project. So a question to ask is like, are people here in this ecosystem because they actually want to use this? Or is it just because they're getting paid to show up? That was a really good question. All right, it's come time for us to do final thoughts, last questions, suggestions, good jokes, words of wisdom before we ride our dogs and ponies off into the sunset for the weekend. If you enjoy Rise Up, and especially if you're hearing us for the first time, did you know that we're live Monday through Thursday at 7 a.m. Central Standard Time? That's 10 a.m. Argentina local time. And we would love to have your questions in the chat. You can also go where the show lives 24/7. I'm talking about community.rumshq.com, where the only thing missing, my friends, is you. Final shout out to all the partners who make this show possible. I'm talking about the White Whale, Unlock Protocol, JITO, Arculus, the official cold storage sponsor of the Rise Up Morning Show, and who am I forgetting, Alex? Polygon, of course. Did you know that right now, through December, if you create content about Polygon on any network using the hashtag UGC, the hashtag Polygon, you will be entered into a pool of participants who will be chosen to split a $25,000 prize pot. And we have it on good authority that if this goes well, they are thinking of extending it and amplifying it. More prizes for more people. I want to shout out all the folks, Seavish, Bearded, Matthew. Dude, Matthew's videos about Polygon are killing it. They're killing it.
Doing great.
If you need help with that, jump in the community. If you're a creator on this app and you're like, trying to make stuff work, then like do this thing and let us help you amplify it. Tori asked the follow-up question, all of December? Yes. Rudo confirmed that they're going to basically be doing this through the end of the year, and it's sort of an ongoing rolling thing. There's not a particular deadline, so we can help you. Tori says, idea for a video, take Polygon to Thanksgiving.
Correct.
I feel like actually that would be really hilarious and fun. Alex, do you have a final thought on the way out the door? I've got a resource I want to share as my final thought, but I need just a second to pull it up.
I think, I don't know. I think I don't know, man. It's really hard. I really appreciate the question, like what hurdles is the industry facing? Because that's pretty much what I spend all day thinking about. And I don't know, man, it's tough. I think we're at a critical point. I was talking to Evan. I didn't get a chance to talk to you about this yet, but I was talking to Sam Ogborn yesterday.
Yeah.
Sam. And, she was talking just about, the need to, like I said, clean up the optics and expand the conversation to include more people, but in a way that is, more relatable, less cringe, less polarizing, talking about the problems actively being solved by things like DeFi, instead of, harping on the word crypto, because it's getting worse and worse and worse.
Yeah.
And, it's interesting. Part of me thinks, I don't want to like admit defeat and abandon the word, because crypto is like a good descriptor and it doesn't stand for anything nefarious or malicious, even if, the power of some of those tools is used for bad in some instances. So I don't know. I guess I would leave by saying that I encourage everyone who really cares about the future of this industry to make an attempt to have conversations with people in your life that are open-minded and embracing of skepticism, to just try and help clean up the optics, like one person at a time, because we're really fighting like an uphill battle, honestly, against corporate America, which is the way that most battles in this country tend to end, with corporate America winning. And it makes me like immeasurably sad to see that happen here, because this was literally like the anti-corporation industry, and now it's purely a corporate industry. It's sad. And you being at DevConnect makes me think like there's still a desire to, re-embolden the grassroots initiatives that made this thing great in the first place. And I just really think we need to hold on to that, instead of being super excited every time BlackRock announces they have something else that they can sell us. Yeah,
it's time for an industry-wide gut check. It's really the call of this conference, and has always been our mission. That's really affirming to hear. I got a great voicemail from Doug the other day who was saying, "Hey man, I think you have a real opportunity to lean into the what is Web3." And my first reaction was like, Doug, bro, that's what we do. But it's apparent to me that maybe we're not speaking often enough, frequently enough, or clearly enough about what we really are teaching people here, that this is a movement to build a new society, a different civilization. Yeah, sure, you can trade some tokens to make some money, but if that's all you're doing, you really are missing out on the wealth here. And it may be difficult. You're taking it on faith right now, or you're not connected to all the dots that we see. So I want to be real intentional about doing a good job of teaching people those things. DeFi as an example, or just how to be sovereign or how to be communal with these new tools in ways that actually improve your experience of life right now, that help you do better things better. Okay.
It's worth noting that we've it's no coincidence that we have the partners as a channel now that we do have, because this is the goal. The goal is to fight that fight better than we ever have been before, using the leverage and the power that high profile partners can bring to you. So what are the things that are the most important skills to pick up? DeFi. That's why we're working with JITO, because it's a robust DeFi platform where you can do all sorts of stuff, where you can genuinely put your money to work for you, built on an ecosystem that actually has users, product market fit, growth, adoption, scalability, purpose, all of that. Invest in something you believe in, put it to work for you. Arculus, because self-custody is the most important skill that you can learn after learning how to read a blockchain explorer. I will maintain that that's the most important. Yeah. But understanding how to take true ownership of things that you are supposed to own, instead of relinquishing that to someone else who will protect it for you while they use it to their benefit, right? The ultimate bank scam. Polygon, because it's a network that is reaching all around the world to spread all of this stuff and to try to teach and try to do a better job representing itself and try to clean up the optics that are not in the world's greatest place right now. Unlock, being a group who's identified a problem that is genuinely affecting people all over the place. Maybe in the United States, it's harder to wrap your head around that one's importance and significance, but I promise you that in many, many places around the world, the inability to safely, securely, and irrefutably prove that something about you and your accomplishments are true is incredibly and desperately important. So there you go. There's a targeted niche example of a way that you can use this tech and the power of it to make someone's life better in a way that also then helps amplify and support the overall network to make other things built there work well too. The white whale, because it's important to look at things through different perspectives and to understand the way that the rich and the powerful look at it, and the way that I think another thing that he does that's really great is just talking about the types of access that he's given just based on size, to help peel back the curtain a little bit and help you understand what you're up against if you think that you're going to go dabble in leverage trading on platform XYZ. It sometimes takes, a position of significant size to be able to expose the inner workings of that protocol, how it works, right? And I don't know. It's a curated list of things that we specifically chase down because of the ability to use every single one of them to tell a better story about the industry and to empower you to take more control of your money, end up in the place that I believe we all want to end up, regardless of how we want to get there. We just want to end up happier, more secure, more stable, and feeling like we have some semblance of control over our assets, our stuff, our money, things that have been taken away from us for our entire lives.
V asks, where can we find a list of these? And so I want to direct your attention to the website rumshq.com. If you go to the menu at the top left of this site, you can see a little drop down with a bunch of different options. One of those options is recommended tools and deals. I feel like we should change this to our sponsors and favorites or something. I don't know. Yeah, Alex is working on a new website, so stand by. But super easy right here. We've got Arculus, the official cold wallet partner. We've got Polygon. We've got the White Whale. We've got JITO. We've got Unlock Protocol. And then below them, we have a bunch of not sponsored, but it could be links from friends of the show, from tools that we've used. I would love to continue to expand this over time. But if you click these links, it'll take you to whatever their particular call to action is. Like, you can get your Arculus wallet with 10% off, or you can learn more about Polygon's UGC campaign, or you can do more with your soul and go deeper with JITO. And we will definitely invite you to continue to check back on this over time. And also really, really, really the best thing to do is right from the homepage. The most important link is right below this. Join our free educational community. Start here. Sign up and start learning today. It is totally free to join. Yes, we've got premium memberships that'll take you deeper, but you don't need to spend a dime to learn with us. That is the best thing to do if you're trying to learn crypto, is to find a community of other users who can help you learn. So thank you for trusting us. And I said one resource, but I have two. I want to shout out our good friend of the show, moderator extraordinaire. He's living the Pat Sajak lifestyle. I'm talking, of course, about Tech CEO. Don't follow your dreams, follow him, because he's built a great tool that I think is super helpful to the skills that Alex said you could learn. This is the AI crypto directory, okay? AICdirectory.com. That's the link. Or you could go to AIcryptodirectory.com and it'll redirect you here. This is a free guide that has like the top AI and crypto tools, courses that'll help you learn. If you wanted to mint an NFT, they've got links to marketplaces. And I just love that our friends are building cool stuff like this. This will help you get upskilled. So shout out Tech CEO. Version 2 is coming soon. Keep being awesome. Keep doing you. And then another link that I want to share with you, I'm going to post both of these in the community, by the way. If you want to build your skills, we talked about starting a white paper book club before, Alex. Reading a white paper, or like the plan of a crypto company, can be a helpful way, not just to learn about what that company says they're going to do, but can be a really good way to teach yourself cryptography, cryptographic principles, like why blockchain as a medium matters. And I mentioned Hasib earlier, Hasib Qureshi from Dragonfly, great venture capital. And he's one of the co-hosts of one of my favorite shows, The Chopping Block, through Unchained. And he said on X, someone was asking for a bear market reading list. So if you want to brush up on your crypto foundations, here's his all-time crypto white paper, academic paper tier list. And he ranks them from like S papers all the way down to A, B, C, mostly because a lot of these different papers he mentions, the Bitcoin paper, of course, the Uniswap V3 paper, the Avalanche consensus paper, Eigenlayers paper, Arbitrum's paper, these all introduced really unique, interesting, and novel blockchain and cryptography concepts. The MakerDAO paper is excellent. You can read about the introduction of oracles, for example, in the, I think the Chainlink paper. This is just a great way to spend 20 or 30 minutes reading to learn something really cool about crypto. And like I said, I will post this in the community so that you can find it. Alex, thanks for another great week of shows, man. Thanks for helping me out. And shout out to everybody listening. We say it because it's true. You are the very best part of what we do, and we appreciate you for it. So thank you, my friends. And until next time, everybody, stay safe, be well, rise up.